Hello and welcome to Switzer Investing TV. I'm Peter Switzer. Thanks for joining us. Now, this is on a day when the market is actually very negative, worried about the Trump tariffs that we'll hear about on April 2. That's Wednesday in America and Thursday morning our time. And it's going to have a big impact on the market. And clearly, I think that if the tariffs come through harder than expected, the market will fall again. But if Trump relents and is nicer than you might expect on tariffs, the market will really like it. Let's just see what Junbei Liu of 10Cap is thinking. Paul Rickard as well, of the Switzer Report, he would have a view on this subject as well, and he's coming up later in the show. So without any further ado, let's cross to Junbei Liu of 10Cap Capital. Junbei Liu, thanks for joining us.
Thank you for having me, Peter.
Okay, the obvious question to me is the market overreacting to the threat of Donald Trump and his tariffs?
Local market is overreacting, and market is sort of acting to whatever is to come, and then reacting to the uncertainty. I think that what's interesting here is that so far the tariff impact on a lot of economies and things is not as significant. Of course, some of it, certain sectors impacted more, but it is market just simply saying we're not sure what is more. Is there more to come? So really, just to take profit and selling off any company that potentially have exposure to those.
Yeah. But why do you think tech stocks in particular are being smacked? Like, sure, I get Amazon sells stuff and so does Apple, but a lot of the smaller tech companies are purely service type companies that will have no tariff implications whatsoever. Is it a matter of it's just risk off and they're just selling anything that looks risky?
Absolutely. Tech is the easiest one for investors to sell. What investors doing, they're simply taking the money out off the table. So they're selling all the previous winners, and they are unfortunately the tech companies. So even though the earning doesn't really have much changes, even with the tariff, it's really just people taking profit off. Hence why you see just across the board, not really company specific.
Okay, let's go through some companies. Now, for my Switzer report today, I just couldn't resist but say, gee, Xero and NextDC look like good value if you're prepared to bet that Donald Trump is not going to scare the pants off us on April 2. What do you say?
Look, I agree. I think, Xero in particular, it's actually tracking really well. And then the US market itself is actually going incredibly strong for this company. It's got a result coming up and actually has quite a very strong sort of a catalyst coming up for this company. I think it looks really great. NextDC is interesting. Look, we still like the data center, but what's interesting at the moment, what's unfolding is a lot of tech companies are now cutting some of the capex across the data center simply because their earning in the US is sort of missing the expectation. So, they're just recalibrating. They were spending way too much and they're sort of just pulling back a little bit. Hence why you're seeing the weakness in the NextDC. But my view is that they're very close to win the next contract, and that will see the share price bouncing.
Yeah, it tends to do that. Historically, I've watched NextDC. It gets to a certain level, comes off the ball, then sort of sidetracks for some time, and bang, off it goes again.
That's right. It's the contract is very close. The rumor is that it's very close to getting the 150 megawatt contract. It's huge, and it's not too far away.
Okay, so let's go to a company like Zip. Is Zip and Afterpay, namely Block, are they good buys on the basis that the US is going to be probably buying more US stuff? The suggestion is that the US dollar could come down and Donald Trump will be trying to get some economic growth out of a lower US dollar. Are these sorts of companies got potential because of that?
Yeah, look, I think of what people, I think it's got a lot of potential. So both Zip and Block is down almost 40% so far this year. It's quite significant. It's partly because it's an expensive company, the winner, that people selling the winners. And also because at the moment, consumer sort of sentiment is pretty weak in the US because Trump keeps talking about, on the headline, talk about tariffs and share market falling. So, it's causing a bit of softness. So people are a bit worried about sort of what is to come. But I think for both block and actually block management, just being in Sydney recently, the underlying performance of the consumer, they're in the lower tier and the like, it's not seeing any impact. So, we do think the next earnings update will be very strong for both companies.
Okay. So what companies in particular are you looking at saying these prices are terrific prices?
Yeah, look, I think I've got a handful, plenty of them. The likes of Prometheus looks
Yeah, I
fantastic.
was going to ask you about Prometheus. Yeah, it
That's
really has come off the boil, hasn't it?
That's right, it has. So it's down 20%. And, again, it's the winners. It's done so well in the last 12 months. People are selling it just so that they can take some profit. That's represent good opportunity. I think another company is interesting. It's actually in the value end, which is BlueScope. BlueScope is actually a beneficiary of the high tariff across the steel. And the steel spread is actually incredibly strong. And the company at current steel spread is actually come earnings upgrade in the double digits. So, I think BlueScope looks very, very interesting, during this volatility.
Junbei, is Liberation Day, Donald Trump's Liberation Day, going to be as scary as people are expecting?
Look, I actually don't think so. I do think that that's the day might represent the period where market finally realized it's not as bad as expected. And then as long as Trump stick to what he said so far, the market will find stabilization.
And what about China? We're expecting some China data this week. Are you still in the camp that China is going to sort of surprise on the high side, and that's going to be good for things like iron ore and copper?
Sure. Look, China is actually doing quite well at the moment. The data came out today, actually looks reasonably strong, and consumers is certainly turning. China seems to be the bright light at this point. Of course, the tariff might have impact, but it's not as high as expected, as previously expected. So, I do think the iron ore should be reasonably supported. But now, the reason Fortescue is being sold off recently is because of the steel cuts. The to lower grade steel. But I do think that Fortescue, given the actual demand side, it is going to hold up well.
Okay. Is there any other stock that you'd like to talk about before we bid you farewell?
Yeah, look, I think there's another company that looks interesting is Fisher and Paykel. I do think this company has been sold off on tariff, on high tariff, is more than compensate the share price fall, which is down 15% so far this year. Very high quality company, base earnings doing really well. Companies already told the market what the earnings might look like once the tariff goes in. So if there's any off chance, the medical equipment gets sort of excluded from it, which it did last time, share price will pop really quickly. Even with it included over the longer term, the pricing power is very strong for a company like Fisher and Paykel. So over the medium term, these prices will be absorbed by high price points.
I'm sure Jason Tay, who manages the Switzer Dividend Growth Fund, will be very happy to hear that because he likes Fisher and Paykel as well.
It's a great buy.
Okay, good to see you, Junbei Liu. Thanks for joining.
Thank you, Peter.
And that's Junbei Liu of 10 Cap. Now let's see what Paul Rickard's thinking about this very jumpy market today. Well, Paul, thanks for joining us.
Thanks, Peter.
Are you afraid? The market's down a lot today. And
no,
you can be nervous.
I'm not afraid, Peter. And as I said, I didn't think the correction finished last week. I think this is going to take. This is playing out over a couple of months. I don't think this is necessarily all over by Wednesday or Thursday after we go through.
Yeah, April 2.
April 2
is Wednesday in America. Yeah. Thursday morning will be our reaction. Yeah,
I think we've had a good run. We've got some chaos in the White House. People are thinking about what it's going to do for the economy. Consumers are getting a little bit defensive. And now, market's going to have to sort of pause a little bit as they want to see some of these things flow through and see that earnings aren't too badly impacted. That's why I think, sure, if it's all clear on Thursday, the market bounces higher, right?
Yeah.
But I think it'll come back to it. And I think Australia's in a rather unique position that we've also got a federal election. We've got the consequences, maybe not, of a hung parliament, question mark. Maybe Albo will get a majority, who knows? But don't think that's necessarily a good thing for our market. Plus, we haven't really got the Chinese and resources firing yet. So I think that makes it all hard for our market to make substantial headway.
But do you concede that if the news from Donald Trump next week is better than expected, the market will say, okay, that's a reason to buy, and we're probably overreacted?
Yeah, look, I'm sure we can get a bounce on Thursday, Friday, if the news is better than expected, and maybe there's a bit more. He's a bit more discerning about how he applies tariffs, and I think one of the concerns has been is just across the board there aren't any exceptions, and so that catches good and bad, and also things that necessarily aren't good for the US economy.
Yeah,
and I think you'd like to see a little more measure in terms of how he's applying it. I think the market would too, Pete.
Yep. Okay. So today in the Switzer report, I thought that some tech stocks, are really good quality ones, probably look like good value, as long as you understand it could be another leg down. But like, for example, Xero's dropped a lot, NextDC's dropped a lot. And I see them as two quality tech companies, where other ones like Megaport and Ordinate, they're ones of the future. There'll be better companies in the future. If you were going to be a buyer, would you be interested in buying either Xero or NextDC?
Yeah, I would certainly look at both NextDC. Zero, I don't think so. I think Xero could. I like Xero was like $80-$90, right?
Yeah, but you're a cheapskate.
And then I know that, but I think I'd be more inclined NextDC for the long term.
Yeah.
Although in the short term it's a bit out of favor.
Yeah.
Xero, I want to see Xero more like in the 125-ish type level.
Yeah. Okay.
Well, I think what Xero has, to its credit, Xero has demonstrated to the market, it has enormous pricing power.
Yeah.
If you're a Xero user, you certainly know it, right?
Yeah.
The fees are really gone up.
Well, I am a Xero user, but I haven't noticed it. But you are, and I know you have.
I have two. They've had two big increases in the last 12 months. And so it's got a lot of pricing power.
Yeah, which is a good sign for the company.
Which for a shareholder is a great point of view, right?
Yeah. Okay. So you actually had a bit of a look at James Hardie. Tell us what's happened, because some people might not be aware of it. And James Hardie, of course, makes siding and the replacement for fibro.
That's right. So James Hardie, nothing to do with asbestos. It's
in the bad old days it did, but not now.
It's fibre cement products, so things like cladding for houses, eaves, all that sort of stuff. Its major markets, the US got about 75% of its income in the US. Australia's about 11%, and Europe's the balance. So they've announced a takeover for a company called AZEK, AZEK, which is a Chicago-based manufacturer of things like fence railings, or not fence railings, the stuff if you're outdoors for your home. So
it could be decking and all that.
Yeah, we'd probably call them pergolas and those sort of things. Is that right, the phrase? I don't know, but things you use for the decking and so forth, right? And they see that as hugely complementary,
compatible business
to what they're doing. They also, part of James Hardie's strategy is that there's about 35 million homes in the US that are between 20 and 40 years old. And they're really sort of after this, what they call this repair and replacement market. And most of those homes have used wood-based products in terms of things like cladding and railings and all that type of stuff. Now, clearly, wood and even synthetic wood's not as good from a climatic point of view in terms of, insulation, not as good with the weather. And so wood products are going to be phased out over the next, or being phased out. And so that gives tremendous opportunity for the products that they're making. And so they say,
like imitation wood, and when painted, people don't realise they're not wood.
And they say that this effectively, this takeover doubles the size of their total addressable market, or TAM, which is a phrase that investment bankers and economists use to say, what's the total size of the market we could be part of? So they say really quite strategically. The market, on the other hand, feels that they've overpaid. It feels it's going to be dilutive to shareholders in the short term. It feels like some of their so-called revenue synergies are going to be harder. So James Hardie's got a huge distribution network. This other company's got a huge distribution network in the US.
It sounds as though
they're talking to the same players. Well, why can't they also sell our products as well as this product? That type of argument. So that's how it goes. But I guess the market's a bit more, I won't use the word cynical, but just looks at that a bit harder.
Yeah.
So the market thinks they've overpaid, likes the acquisition, but thinks they've paid too much and it's a bit dilutive. So the share price came off about 20% last week, which is a pretty severe reaction.
Yeah. Because
And
most analysts like the company before they even mentioned mergers. You would have been talking probably 20-25% upside before this.
yeah, they were. So a couple of analysts, really crunched the numbers and cut their target price. So Macquarie, for example, cut its target price from $65 to $44.
Big drop.
But even with all those revisions, the consensus is still about 52. James Hardie's trading about 38. That's about almost 35% upside.
Yeah.
This was a company that people were all quite bullish on 2 weeks ago at over 60.
Yeah.
So I think there's value there, Pete. There's an argument that goes that, well, James Hardie, most of its business is in the US. It's a US effectively building products company.
Yeah.
Do you as an Australian investor really need to own James Hardie? It's not particularly special.
Yeah.
You can get companies like that in Australia. Look, yes and no. I think that has some traction, but it is in our ASX top 50. It's got Australian heritage, and of course, it still has quite a big business operation here. So that's the argument for it. It's probably reasonably safe. It's going to target the repair and remodeling market. That's its main focus, less exposed to new home sales in the US. So as long as the US consumer's prepared to spend, I think it looks okay.
What about the dividend?
No dividend. So that's one of the other things.
Yeah.
It doesn't pay a dividend. It just buys its shares back, very much model of some of the US companies. So that's going to be a negative for some investors. But it's probably a reasonably interesting way to have a look at the American market. I think it's in the buy zone, Pete.
Right.
Only questions, I just can't see what the catalyst is to take it back up. It's cheap, but there are a lot of stocks that are cheap.
But good reporting over the next couple of quarters will probably be
good reporting, and also good progress in terms of the merger. That's probably the catalyst. And James Hardie is a company that has done very well, has been an outperformer over the last decade. And, you got to back track record sometime.
Yeah. Okay. That's Paul Rickard of the Switzer Report. If you want to know more, you want to read the story and the analysis from Paul Rickard, you have to be a subscriber to the Switzer Report. Thanks for joining us, mate.
Thanks, Peter.
And that was Paul Rickard of the Switzer Report. And let me remind you again, Paul has done a deep dive into the future of James Hardie after that merger deal. If you want to read that, you're going to have to be a subscriber to the Switzer Report. And now let's catch up with the CEO of BTC Markets, Carolyn Byler, on a day when Bitcoin is still struggling because of those Trump tariffs. Thanks for joining us, Caroline.
Great. Thank you so much for having me.
Yeah. For those people who don't know BTC Markets, just explain that business in a nutshell.
Yeah, great. So we're an Australian-based cryptocurrency exchange or digital asset exchange based predominantly here in Melbourne, although we have team dotted all over Australia. We've been around since 2013. Only looking after the Australian clients. So we've got about 325,000 or so of those on board the platform. We've traded, I think, just under $30 billion at this point since we started the business. And predominantly people trade in Bitcoin, or BTC is its acronym. Bitcoin, Ethereum, and XRP. They're probably our three biggest traded pairs, although we have about 40 in total on the platform.
Okay, so for those people who have no idea how they might buy Bitcoin or Ethereum. So give us an example of how someone actually does it.
Yeah, so the way our platform works is that you're buying from other Australians. So whether you're buying or selling, it's another Aussie on the other side of the trade. And you open up an account with ourselves. It's the usual kind of KYC that you would do if you're opening up a bank account. You link it to your Australian bank account, meaning that you send money to and from your Aussie account. And then you put, say, $100 or $50 or $5,000, whatever you're comfortable with, onto the platform and go in and put a trade in to try and buy the equivalent value in Bitcoin, in BTC. And once that trade executes, like it would do if you're buying on the ASX, the trade executes and you swap the cash for the cryptocurrency, and then the crypto sits in your account here at BTC Markets, or alternatively, you can withdraw it and bring it to your own cryptocurrency wallet. So entirely up to the consumer choice on that, however they want to approach it. And then the same thing happens in reverse. If you want to sell out your position, you're selling it to another Aussie, and you withdraw the money straight to your bank account if you so chose here in Australia.
So I think some people think you can only buy one Bitcoin, and they've seen American dollar prices like $100,000. But the actual fact, you can buy smaller units, can't you?
Yeah, absolutely. You can buy it in, smaller denominations like $5, $10. I suppose it's a new way of thinking about investments in particular. As you say, rather than having to buy one share or one Bitcoin, you can just buy fractions of each. And I think that makes it so much easier for people to really manage their investments, and particularly in this asset class, but really manage their investments in a way that makes the most amount of sense for them. And certainly the trend as we're seeing is it moves towards digital assets, where we're going to see, the prediction is that we're going to see traditional shares in this tokenized form. In the future, we could see ourselves buying, just $1 of, say, any of the FANG stocks or any of the particularly large stocks at the moment. You wouldn't necessarily have to buy one whole share. You can just buy part share. So I think that really does change things for investors, particularly for the retail investor.
So how does someone make the point that they want to buy, say, $10,000 worth of Bitcoin?
How do you mean?
Well, the thing is this, I saw very well you've said you put the money into your account with BTC, but then how do you actually say, how do you actually register the fact that you want to buy 10,000 worth of Bitcoin? Because,
Yeah.
if I'm on Consec, I can actually nominate the stock and write down how many units I want to buy or sell. How do you do it on BTC?
Yeah, it's a similar format. I suppose we've kind of leveraged what already exists and just put it into this new world where you can go in and say, yes, I want to put $10,000 of Bitcoin. You buy it at whatever price you particularly like. So you can put in, a limit order where you, like you would do on ComSec, where you say, I only want to buy at this price, or you can say, I want a market trade where I'll execute at whatever price it is today. And as I say, you can balance it. Even if you put 10,000 in your account, you can just say, I only want to buy $5,000 worth. And then you place the trade into the market yourself. So it's that direct peer-to-peer market activity rather than having to go through a broker, which suits some people. Doesn't suit everybody, but it suits people currently at the moment, as we see on the platform. And then once that trade's filled, it all happens instantaneously. There's no T+3 or T+1. It's all T+0. So the trade executes immediately as soon as the conditions are matched. The transfer happens, and you then own $10,000 worth of Bitcoin.
Yep. So, how has your business been affected by the growth of exchange traded funds specializing in cryptocurrency?
Yeah, I don't think actually we've seen too much of a negative, if I'm being perfectly honest. I think that if anything, it's grown the pie and grown the interest in cryptocurrency. It's in the same way, I suppose, that exchange traded funds and existing share trading happens concurrently and without too much of a negative impact. If anything, as I say, they kind of feed into each other. Certainly, what we've seen with the big names like BlackRock, Fidelity, Invesco, etc., with their ETF products, they've broadened the universe. They've broadened the scope of the investors who are looking at this asset class and conveniently put it in a format that investors are used to with an exchange traded fund or an exchange traded product. It's got an ISIN. We know we can put it into our traditional formats. Very, very convenient for people who perhaps don't want to come into a cryptocurrency exchange themselves. They can still get that exposure. And through their traditional format. So very good for us, I think. And also it's brought the conversation into really, really mainstream media. When you've got, as I say, the largest asset manager in the world in this asset class, everybody's going to be talking about it.
What about your regulation? How are you regulated? Because a lot of people think, okay, it sounds great, but BTC is a relatively new organization. What kind of regulation is there of what you do?
Yes, regulation actually has probably been my pet subject I've been 5 years in the hot seat here in BTC Markets, and over that 5 years, it's certainly been the topic I've spoken about the most. We ourselves are a holder of an Australian financial services license for non-cash payments, and we're looking to expand that at the moment. We've got a variation in situ, but we have been actively working with successive governments around an appropriate and proportionate regulatory framework here in Australia. Certainly, we could see the direction that this industry was going in, and despite some of the headwinds that has been faced overseas, that's definitely changed. And now there is a widespread embrace of what cryptocurrency is about and also what digital assets are about. And Australia really, really, really needs to pick up the game when it comes to the regulatory framework around it. However, we've been told by both Labour and Liberal parties now going into this next election that the appropriate regulation of cryptocurrency is a priority for them in whoever forms the next government. So that's certainly very positive for the country.
Well, would the biggest problem be for you is that there was a massive market crash and everyone wanted to get out of Bitcoin, and so most of your clients would want to be sellers on this day, and most people don't want to be buyers. Would that be the hardest thing that you'd have to manage?
I mean, certainly those are challenges. For us, we're quite fortunate that, our proprietary tech stack is very well made. So we're on 24/7, 365. We don't have market closures. We don't have market fallover. So we can handle volume. We can take it when you've got that kind of volatile behavior. What we've also found is that we haven't generally come across an occasion where we haven't found buyers if you're selling, particularly for an asset like Bitcoin. That just hasn't been an instance that we've seen here or elsewhere in the market. Perhaps on some of the smaller stocks or smaller assets rather, you perhaps may see that behavior, but we haven't seen it with what we have on platform. There generally seems to be a buyer for every seller. But certainly, I mean, as it grows and matures, and certainly what we'd like to see with that regulation coming in, we really put some of that rigor around it, the rigor that investors are used to operating under, say, for an ASX or any of the financial institutions here in Australia.
Was COVID good for your business? People sitting at home online, wanting to have a crack, like I would have thought it would have been good for your business.
Yeah, I mean, it was good for the business in terms of the volumes worldwide all picked up and the volatility all picked up. I think our business here in Australia, like every other business, particularly in Melbourne, we were in lockdown for a couple of years, so it really transformed how we operated as an organization. But for the business itself, certainly we did very well over this period. And then we went into, I suppose, what they call the bear market for about 18 months, and that was brought with its other kind of challenges where you kind of see these swings and roundabouts for the business cycle, and we've definitely lived those. But we're in particularly calm waters. I think at the moment the business is doing well. I think there's certainly a sense of optimism around where this whole market is going and the role that we're playing within this. Yeah, we're very positive.
Has Trump been good for the media around Bitcoin, but has his tariff talks been bad for the price of Bitcoin?
It's a mixed bag. So Trump certainly, like everywhere he goes, he's a great man for a headline, and his forays into cryptocurrency under the Trump banner specifically, they've been well publicized. And what Trump's administration have been very good at is they have stopped the SEC's investigation across so many different cryptocurrency businesses. They've paused those, they've closed those with no findings against companies and organizations. They set up a cryptocurrency task force to kind of realign regulation with the industry itself to bring it in under that regulatory umbrella without a huge amount of change in variance needed. And they've also kind of said, okay, we want to make the United States the home of cryptocurrency. They're very keen to try and bring innovation onshore, maintain consumer protections. Certainly that's the mandate for the task force. And this is a shift. This is a change. The new SEC chair that's coming in has also had exposure or directly advised cryptocurrency businesses before now. So we're seeing a pro-crypto administration, not necessarily just from Donald Trump himself, but across the administration. On the other side of that, exactly as you've described, the Trump tariffs, I think they've had an impact across macro markets and also equally spilled over into cryptocurrency. We're not alone or isolated in terms of how, particularly when it comes to liquidity, we're on the front line of that as much as anybody else. And I think that we're all kind of sitting on the fence and watching to see what's going to come next out of the United States, and more importantly, how individual countries are going to react to it. Certainly here in Australia, obviously, we're all waiting to see what happens over the next few months.
Okay, so last question to you. Your dear old mum in the UK rings you up and says, Carolyn, should I go long Bitcoin and on the basis that Donald Trump will be nicer on tariffs? What would you say?
I would say, Mum, I don't give financial advice. And secondly, what I would say is that so my dad actually has an account with BTC Markets, and I know this is a bit of a bit of a hokey thing, but when I make business decisions, I think about, my dad making
Yeah,
these
sure.
investments. I also think about my mum if I did something that my dad would lose money on. So I think about my family, I think about all the other families and all the other humans who've invested through BTC Markets, who come with their own cares, concerns, investment outcomes that they want. The amount of young people who've been able to buy houses or get mortgage deposits through their cryptocurrency trading that we get to hear about. I mean, that's a wonderful story for any business to be a part of. So it's very much those, the human side of the business is very much to the fore of our decision making. Trump tariffs aside, very much at the very center of what we do.
Carolyn, thanks for joining us.
Thank you so much.
And that was Carolyn Bowler of BTC Markets. And if you want to navigate this very tricky market with Donald Trump's tariffs really spooking many of the big investors in the market, then you're going to have to think about becoming a subscriber to the Switzer Report. That's where you get access to a number of experts, people that often aren't on this TV show, who have got fantastic insights into other stocks that you might be interested in. So if you want to know more, become a subscriber to the Switzer Report. Go to switzerreport.com.au. Thanks for joining us. I'll see you next week.